Welcome everyone to Vested Interest. This is Shane back again for another Stock Pick of the Day video. It is April 24th. Today we're going to take a look at one out of the industrial sector, Masco. This is a provider of home improvement products and building materials. They're again out of the industrial sector. And if you have not done so or you would like to help out the channel, if you could hit that thumbs up down below, make sure you're subscribed to the channel, hit that subscribe button, join us on this journey to financial freedom, join the Vested Interest community. Make sure the notification bell is rung down below as well so that you're notified whenever we put out any new content, and drop a comment down below. Let me know if Masco is in your portfolio. Is it one you're watching? Is it one you're buying? Is it one maybe you're selling or avoiding altogether? I really would like to hear from you, and doing all that really does help out a small YouTube channel like mine. So thank you to those of you out there who have subscribed to the channel and hit that thumbs up and rung that notification bell. Again, it really does help out. Now, this is the Vested Interest Stock Screener. This is how I set up the videos. It's also how I look at companies on a high level to see if I am interested in investing. If they meet 5 of 8 or 6 of 9, if it's a financial company like a bank, then they go on my watch list. I do have a bit more of a deep dive into the financials and do a discounted cash flow analysis to try to figure out a price I'm willing to buy them at, and then wait for them to come within that buy price and 15% of their 52-week low or lower. Obviously, if I can get something as low as possible, all the better. But just because it meets 5 of 8 or 6 of 9 does not mean I am investing necessarily into the company. So don't think that if it meets this screener, that means you should buy it. And you should not be buying anything just because someone you don't know on YouTube recommends it, right? Make sure you're doing your own due diligence, that you have your own investing process and plan in place, and you are following your process and plan, right? We're all at different ages. We're all at different parts in our journey in financial freedom. I'm in my mid-40s. Some of you might be in your 20s, 30s. Some of you might be in your 50s or 60s looking to retire right away. So looking for more on the income side, where some of you might be on the younger side looking for more growth. So again, we all are in different phases of our journey in the financial freedom game here. So don't just blindly copy me or anyone else that you see on YouTube. Now back to Masco. If you want to check them out, masco.com. That's masco.com. That is your homepage where I pull this information from. Masco Corporation is a global leader in the design, manufacture, and distribution of branded home improvement and building products. Our portfolio of products enhances the way consumers all over the world experience and enjoy their living spaces. We believe in better living possibilities for our homes, our environment, and our community. Across our businesses and geographies, we seek out these possibilities to grow ourselves, enhance our customers' lives, create long-term value for our shareholders, and improve the world around us. As a family of companies, we share a strong ethical culture and continuous improvement mindset driven by people and backed by an operating system designed to leverage our scale. So just like it says, right? Global leader in design, manufacture, and distribution of home improvement and building products, right? So if you're out there redoing your kitchen, flooring, or you're building a new house, you can probably find some of the material that you need from Masco. Again, masco.com, that's their homepage where I pulled this information from. If you want to know more about them and see what exactly the products that they offer are, go check them out. Now, the reason we're taking a look at them, down 4.48% on the day. We are talking about Masco Corporation, ticker MAS, out of the industrial sector. Closed out the day at $69.74. 52-week range as low as $47.66, as high as $78.94. So they are closer to their 52-week low than their 52-week high, even with the almost 5% drop today. Market cap of $15.383 billion. A beta of 1.26. They are more volatile than the overall market, and you can see that volatility here throughout the day. Price to earnings ratio, $17.35 per share. That is definitely lower than the overall market. $17.35 right now is decent. Earnings per share, EPS, sitting at $4.02. Next earnings date, well, the earnings date was today. So that is perhaps what happened here with this drop-off. Must have been some negativity around the earnings. Forward dividend yield, $1.16 paid out on the year on an annual basis. They are quarterly payers, so divide by 4, or we'll see that here in a little bit. Dividend yield of 1.59%. If they were to drop closer to their 52-week low, you could probably get that around the 1.8 to 2% range, which would be a much better buy-in point in my opinion. Ex-dividend date, February 21st. Looks like they paid out March 11th. Now, we're going to take a look at dividend yield theory. To do that, we look at their 5-year dividend yield average of 1.5%. We compare it to its current 1.59 or forward over here 1.59. And since this is higher than their 5-year dividend yield average, it speaks to actually a little bit of undervaluation, though not much. I mean, really, as close as it is, I would call this fair valued at 1.59%. To call it a margin of safety, I'd want it to be at 1.7, 1.8. And again, if you were to wait for them to pull back closer to their 52-week low, let's say under $60 per share, you could probably get them in the 1.7, again 1.8 range, maybe even 2% if you could get them all the way back down here in the 40 under 50 range, right? Payout ratio is very low on this one, 28.36%. So they have a lot of room to increase the dividend over time. So even though it is a lower payer right now, that could increase over time. So we'll see how their dividend growth is going. Now we're going to take a look at free cash flow. And if you were to get into the financials, you can find a lot of good information there. The balance sheet, the income, is their revenue growing over time? How are their margins doing? Are they growing? Is their debt to equity ratios look good? Are they taking on more debt than they're paying off, or are they paying down debt? Do they have more assets over liabilities? All good information that you should be looking at if you're investing in individual companies. If you don't want to do that type of research, you should just stick to ETFs, like VOO, VOO, or VTI. Would be the two I recommend. I buy VTI, and that's just a ETF that you can just buy every week and not worry about not worry about it. But getting back to Masco, if you go back to 2020 here, they had $839 million in free cash flow. 2021, $802, bit of a drop there. 2022 down to $616. 2023, big jump up to $1.1 billion. Now, they are also repurchasing their own shares. So even though you saw a little bit of a drop there in 2020 to 2021, you'll notice they increased their repurchase of shares up to over a billion, or over a million shares, or billion shares that they repurchased that year. Little bit of a drop in 2022. So that drop in 2022 is not quite accounted for in the repurchase of capital shares. I would say that's a legitimate drop in free cash flow. But overall, from 2020 to 2023, we are seeing growing free cash flow, even with this little blimp here in 2022. And I do like that they're repurchasing their own shares here aggressively, and from 2020 to 2022 looks like they're down a little bit in 2023. Be interested to see if they go back to this, almost a billion shares coming out in 2024, but we'll see. Now, another source that I like is stockanalysis.com. What we saw on the previous page was Yahoo Finance. You pick any sources that you like. I just recommend you pick more than one so that you can make sure the information you're getting is accurate and up to date. So I picked these two. You pick any sources that you like. Again, just I prefer 2 or better. Now, 11 analysts have taken a look at this. They call it a consensus buy. They have a low estimate of $60, which would be a 13.97% decrease from where it currently sits. And this really would be what I would be looking for an entry point, around 60. If you could get it under 60, great. And I think it still has a little bit further to drop. It's a little close to its 52-week high for me. And even though, like I said, dividend yield theory says it's pretty close to fair valued, maybe slightly undervalued, I would want more of a margin of safety for a company like this. Average estimate of $71.55. That would be a 2.6% increase from where it currently sits. And if it happened to hit their high of $81, that would be a 16.15% increase. All the while, you could collect that 1.5% dividend yield if you were to buy them now. Again, if you were to buy them lower, you could get a better dividend yield out of it. Now we're going to go into the statistics here. We're going to look at return on equity and return on invested capital. For return on equity and return on invested capital, I like 10% or better. Now if you look at this return on equity here, negative 482.3%. That is not a good number. I don't know if they had some write-offs, some write-downs that they did here recently, but that for some reason that is an extremely low number. I would need to be doing some more research on their financials to see what's going on there. Now, the return on invested capital is very nice, 33.51%, so over three times what I'm looking for there. EPS forecasted growth, I like 5% or better. They're sitting at 8.26%, so beats the metric there, with revenue forecasted growth at 5.61%. So all good numbers except for the return on equity. And again, I'd like them to be pulled back closer to that $60 per share range personally. Let's take a look at their dividend history real quick. Again, they are a quarterly payer. Payout ratio is low. I like 75% or less. They definitely meet that metric at 28.86. Lots of room to increase that dividend. Now, here is the only thing I don't like about their dividend numbers right now. Only a 1.78% dividend growth. I'd like to see, with such a low payout ratio, I'd like to see more growth out of that. 10 years of growth, so decade worth of growth, buyback yield 0.46%, shareholder yield is 2.12%. Again, all good numbers. Dividend growth I don't like. Return on equity is really wacky for some reason. Other than that, really good numbers for this company. August 2021, they were paying 23 cents and a fraction of a penny. February 2022, they raised it up to 28 cents. February 2023, they raised it up, just fraction of a penny there. And so far, 2024, in February, they raised it up another fraction of a penny. So nice jump up from 21 to 2022, but the last several years, they have just raised it that, fraction of a penny, 0.005 cents. I would like 1.78% dividend growth. I would like more dividend growth than that on this one. Might be, again, worth watching if you could get it cheap enough, maybe, but real low dividend growth on this. I think you'd be better off in something like a variety. If you're looking at something with this low a dividend growth, I want higher yield to start with, probably in the 4+% range with this such low dividend growth. I mean, something like Verizon would be more attractive to me, which has a 1.9% dividend growth, but starting 6% dividend yield. That's just my opinion. This one just needs to increase their dividend growth over time for me to be interested in a company like this. Well, that is really it for this one. Let me know what you think of Masco down in the comment section down below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up. Ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Doing all that, really, again, it does help out a small YouTube channel like me. And thank you to those of you out there who have done so. And I will say, apologies for this being such a late video. My youngest is playing softball now, so we have practices on Tuesdays and Wednesday nights, as well as Saturdays 10 to 2. And then here coming up soon, she'll have games on Tuesdays and Thursday nights. So some of these videos might start getting out a little later. I am helping coach her softball team, so unfortunately, that's just part of being a dad, and I want her to do all the fun stuff that I did, play sports if that's what she wants to. My older daughter is more into the music side. I think she wants to play basketball whenever her school starts to do that, so we'll see how that goes. But right now, I'm in softball mode a little bit, so bear with me for some of these videos that might come out a little bit later. I really do appreciate you people tuning in and supporting me in what I'm doing here. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Masco you'd like me to cover in the Stock Pick of the Day series, go ahead and put it down below in the comment section. I'll work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Hope you've had a great week, man. It's been a long one for me. I hope you had a good night, too, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing for educational and entertainment purposes. Investing involves risk. You can't money. You should never invest in any amount not comfortable losing. Always do your own research and invest based on your situation and circumstances and select criteria or seek the advice counsel certified financial advisor.